everybody. So we started in the previous session with accounting standards. We saw the overview of accounting standards. Now we will dive into individual accounting standards and learn what each of them targets. So we'll be starting out with accounting standard 2, which talks about valuing the inventory. Inventory. Yes, heard about this term inventory? What is inventory, sir? Stock, sir. Inventory is stock. Raw material, work in progress. Inventory, yes, is stock. What are the types of stocks that you generally get to see? You will have some raw materials. You will have some work in progress. You may have some finished goods. Basically, first we learn what do we mean by inventory. Inventory means, okay, let's talk about finished goods. Why does any particular, let's say there is a trader, calculator trader. What is his business, sir? He buys calculator and he sells calculator. That means this particular calculator is inventory or goods for him. Okay. So why is he holding this inventory? What is his intention of holding this inventory? For the purpose of sale. So inventory ka definition is built like that. Inventory means those goods which are held for sale in the ordinary course of business. Because you hold finished goods for what joy? To sell it. Is it okay? So inventory are those goods which are held for sale in the ordinary course of business. Let's slightly modify the example. I am not a dealer in calculator now. I am a manufacturer of calculator. Meaning I buy calculators directly or I make them? I make them. So to make raw materials or to make this calculator, what do I need? Raw material. I need raw materials. Like this is mainly made up of plastic. So I would need plastic. That would be my primary raw material. Yes. Now this particular raw material, am I selling it or am I selling calculator? I buy raw material to produce calculator. But will I sell raw materials? No. So why do you buy raw material? To be consumed in the manufacturing process. Yes or no? So inventory means that those goods which are held in the sale in the ordinary process of sale or in the process of production of such sale or to be consumed in the manufacturing process. That's the definition of inventory. First aspect talks about finished goods. Because finished goods you sell in the ordinary course of business. Are we okay? And what will you do for raw materials, sir? Will you sell or will you consume? Consume means will you use? Will you sell raw material or will you use the raw material? You will use the raw material in manufacturing process and convert it into finished goods. So inventory are those goods. Inventory of raw material will not be sold, rather it will be consumed. So this point number 3 talks about raw material. Is it okay? Sir, today if I start manufacturing process, is it mandatory that today only the process should be completed or some goods may take little time also? Like if you are manufacturing big goods, like big machineries or TV and all. If you start manufacturing process today only it will get over or it may take some 2-3 days also. Possible, it may take 2-3 days, sometimes even 2-3 months also. Especially if you are a bus manufacturer, luxury bus manufacturer. Can you manufacture bus in one day? No, it may take 2-3 months also. Correct? So today you purchase raw material. When will that become a finished product? After 2-3 months. Yes, no? So that means when you start manufacturing process, is it raw material? No, because you have started already working on it. Does it still retain the shape of raw material or something else it has become? Something else because you have started working on it. All right. Has it become that luxury bus already? No. That means it is that in between stage. It is neither raw material nor finished goods. That we call it as WIP. Work in progress. All right. So work in progress, what do we do? It is in the process of production. Okay. So these 3 are the 3 targets of, 3 components of inventory: raw material, work in progress and finished goods. Now, right now, the coaching is already started. Before coaching, you are raw material. During coaching, you are WIP. After the coaching gets completed, you will become finished goods. Like that. So you are in which stage now? Neither there nor here. You are in WIP stage because partially you know few things you don't know. Like that. Are we okay with this? So basically, AS2 talks about valuing these 3 components of inventory. Comfortable, everybody? Okay, again, let's trace back. What do we mean by inventory? Inventory means those goods which you sell in the ordinary course of business. That targets which element? Finished goods. Then, or the goods they're in the process of production. Process of production means WIP. Or to be consumed in the manufacturing process. To be consumed in the manufacturing process means what will be consumed? Raw material. This is the definition of inventory given as per AS2. That's all. So these three ka valuation we're going to take up one by one in this particular session. Okay, everybody. Any confusion or can I move on? Can I move on? Okay. Let me do a thing. Before I get to this particular standard and learn its provision, let's understand why was this standard actually necessary. Okay. Sir, let's say I am a table dealer. I'm a table dealer. I'm a furniture dealer. And one such furniture I sell is what? Tables. Okay, whatever. Computer tables or dining set or whatever. Some table I'm dealing in. Dealing means I'm a manufacturer or I buy and sell. I buy the furniture or I buy this table and I sell this table. That's my business. Okay. Sir, I buy this table from Jaipur vendor. I purchase this table from Jaipur guy and I sell it in Bengaluru. Okay, that's my business. People okay? Now, I'll give you various costs incurred. All you have to tell me is whether this cost can be added to the cost of inventory or it cannot be added. Can you tell me this? All right. Sir, excuse me. To purchase this table, no, I have to pay 1,000 rupees for 1 unit of table to Jaipur guy or to the Jaipur vendor. How much is he charging me for one table? 1,000 rupees. Can this particular cost be added to inventory valuation? Yes or no? That's all you need to tell me. We'll see the right wrong answer later. Can you add this? Yes, sir. Okay, maybe I'll write yes. Fair enough. This particular cost, can you add it to inventory cost of inventory or not? That's all I'm trying to say. Okay. So where is this guy vendor? Is he in Bangalore or is he in some other location? He is in Jaipur. Correct? That means the goods has to come from Jaipur to my Bangalore office. Automatically it will come or I have to incur some transport cost. So I incurred some transportation. The Jaipur vendor clearly told you only have to bear transportation cost. I will not incur. That is your headache. I told no problem. I'll take care of it. So I incurred some transportation cost of 500 rupees per table. To transport 1 unit of table from Jaipur to Bangalore, the transport guy is charging how much? 500. Can I add this transportation cost to the cost of inventory? Can I add this to cost of inventory? Yes, sir. All right. Let me go further. Sir, now he bought this particular transport guy. He bought this table to the Bangalore office. But he dropped it near my gate and he told, you take it. We are not servants. He just got the goods and dumped it outside my factory gate. Now I hired some laborers to do this loading and unloading. They unloaded the goods from that truck and they brought this goods inside my factory. So there's some loading and unloading cost. Let's say that is about 50 per unit. Can I add the loading and unloading cost? Yes or no? Oh, yes. We'll see right or wrong later. Whatever coming into your mind, you go and answer. Alright, sir, the goods came into my factory now. But unfortunately, no. If the table is big, can they send the table like that only as transportation cost? Like if the table is about 6 feet, can they fit every table into a truck? No. So what the Jaipur guy vendor told is the table will have that top portion and 4 legs. He told, see, if I send it in an assembled format as a full-fledged table, it will take a lot of space. We will not be able to transport many goods. What I'll do is I will send the top part separately, 4 legs of the table separately. So that space will be saved. You assemble it. I will send it part by part. You do the assembly in your factory. Okay, everyone. So I hired some laborers and paid them an assembly charges, let's say of 200 rupees per unit. To assemble one table, they are charging 200 rupees. Can I add this assembly cost to the cost of inventory? Yes, sir. So All right. Now, this table normally I am the dealer, no? Correct? But that means I want my name to be printed on that table. I want my brand to get popularized. Correct. Now, we are also saying 101 times ArivuPro. Why? Obviously, a little bit of marketing we also have to do. Correct, right? Marketing is necessary for everybody these days. You guys do it on Instagram and Facebook. We are doing it on videos. Correct? No? But it is a must for everyone. Doesn't matter which profession you are. Everyone is a salesman. Either you are selling a product, you are selling your time, or you are selling yourself. Everyone has to do that. That is a skill and that is the utmost requirement in today's Zamana. Okay. So this particular table dealer, no, he wants his company ka name to be printed on that table. Otherwise, how will his company become popular? Correct, no? So he has on this table, no, he is attaching some lamination. You know, lamination, the topmost sticker, the topmost thin layer. What you see on the table, that we call it as laminate. So he is laminating his company logo on this particular table, and this lamination charges, let's say, he is incurring as 100 per unit. Okay. So can we add this lamination charges? Lamination means thin sheet of paper or whatever you can call it. He'll affix it on the table and then sell it, and that lamination will have his company logo as well pre-printed. So this lamination charges, can you add or not required? Jokes apart, tell this. Or yes or no? Yes, no. Or don't know. Anything I'll take. Yes, no, or don't know. Don't know, sir. Yes, sir. No, sir. Okay, I'll maybe take it as yes. I'm hearing a lot of yeses, so maybe I'll take that. So while all this drama was happening, receptionist is there. She's aramse sipping her tea. She's just watching the process and sipping her tea. I pay receptionist salary. If you have to recover that receptionist ka salary by selling table, no, that comes to how much? 100. If you have to allocate a receptionist ka salary to table ka cost, it comes to how much, sir? 100 per unit. Can I add this receptionist ka salary to the cost of the table? No, sir. No. Somebody is saying big no. Others don't know, sir. So yes or no? No, looks like no. Okay. Sir, after this table is complete, will I keep quiet or will I sell it? Sell it. So to sell this product, now I'm taking the help of certain salesman. And that salesman, he's charging some commission. Let's say salesman's commission is 500 per unit. To sell 1 unit of table, he's charging a commission of how much? 500. Can I add salesman's commission to the cost of inventory? So no, what? No. Were you 100% sure? I just gave you some examples, random example. Like this, you can have hundreds of cost. You could have hundreds of cost like this. Are you sure about every answer in your mind? Did you have a proper clarity? It is a hard yes or it is a hard no. Did you have this 100% clarity, or somewhere that little bit of ambiguity or confusion is there? Some confusion is there. No, few of them were okay. Like purchase cost, transportation cost, all this I think you had reasonable assurance. It should be added. But when I mentioned lamination, receptionist salary, all this, were you 100% sure or some confusion? Some confusion is there. Correct? No. Now you got the necessity of accounting standard 2. Yes. To answer such question, we have accounting standard 2. So obviously in this also, there were a lot of areas which there was not proper clarity. So they have brought in this. For now, let me not go into that particular answer. I will give you the answer for that little later. First, we will learn accounting standard 2. Once you know that AS2 ka provision, you will be able to tell the answer. Are we comfortable? For now, don't worry what should be added, what not should be added. I'll tell you the right answer. Okay. So now you got the intention behind AS2, sir. Okay. All right. I'll put that on hold. Let it be on hold. Now, accounting standard 2 is not applicable for few things. Accounting standard 2 is not applicable for few things. One, if you have WIP for construction contract, AS2 is not applicable. Just underline, that's good enough. Why? Because we have accounting standard 7 which talks about it. Another standard is talking about it. That's the reason they have excluded from here. All right. For service provided, again, it's covered under a different standard. It is not covered here as well. If any shares or debentures is being held as a stock in trade, broker. If you are a dealer in shares, you will know. Sometimes, you will call up the broker and tell, hey, buy 100 shares of Infosys on my behalf. I'll pay you the money later. And the broker will buy the shares. On whose behalf? Your behalf. Okay, so if broker is doing all that activity, for him, what is he dealing? He is buying and selling shares on your behalf. So if any shares or debentures or any other financial instrument is held as stock in trade, AS2 is not applicable. We have another standard, not here. In CA final, you will learn Ind AS 109 financial instruments. Actually, 3 standards are there targeting this. So it's covered there, hence it is excluded here. Now don't worry about this. Big ticket standard, we'll aram se learn it, and very interesting standard. We will learn it in CA final. For now, know that it is not, AS2 is not applicable. That much is sufficient. Okay, sir. This is important. Some questions has been asked relating to the 4th point. If you have producer's inventory, the keyword there is producer, underline that. For producer's inventory of livestock, agricultural produce, forest produce, mineral ores, AS2 is not applicable. Because we have another standard which you learn it in CA final known as Ind AS 41, known as agriculture itself. Ind AS 41, you learn it in CA final. Now not required. Okay, fair enough. So these things just know. You remember it. I think there's one question was there which we'll take it also here. What are those non-applicability I told, sir? Work in progress related to construction contract. Some inventory relating to service providers, because another standard is there, Ind AS 115, you'll learn it in CA final again there. And then if you have shares and debentures being held as stock in trade, it is not applicable. And then not everybody. Producer's inventory of, the keyword there is producer. Producer's inventory of livestock, agricultural produce, forest produce, mineral ores. Okay. So meaning if you are a farmer, what does a farmer do? He produces agricultural produce. Yes, no? So for him, AS2 is not applicable. Okay. Such inventories are valued directly at net realizable value in accordance with the standard practice of the inventory. Okay. This is called out in Ind AS 41. They will apply that. Fair enough. The keyword there is what, sir? Producer. Fair enough, people? Okay, let's see how well you have understood that. If you have understood that, first question you will only answer. Grow More Private Limited is a wholesaler, underline that, in food and agro products. That means he is dealing in agricultural produce. So he has to applicable or not applicable? Not applicable. Okay. He has valued the inventory on net realizable value on the ground that AS2 does not apply to him. You need to comment. This company is saying AS2 will not apply to me and they are valuing the inventory at NRV. Yes or statement is correct or wrong? Wrong. Why wrong? AS2 is not applicable. Yes, for agricultural produce. For whom? Producer. Only for the producer of agricultural produce, AS2 is not applicable. In this case, is Grow More Private Limited a producer or he is just a wholesaler? His wholesaler means he will buy it from farmer or whoever and then sell it. Is he producing it? No. That means for him, is it applicable? Very much yes. So that means the comment that they are making is right or wrong? Wrong. So I'll just give you a sample answer for this. Question number 1, can I write off here only, Bajuman? How to answer, I'll just tell you. It's accounting standard question. It'll all be like mostly case study question or small number driven question. It's simple. A law has not happened, right? No, I think law also mostly will follow the same. I don't know, Sai sir will guide you better there. What you do in the first paragraph or first point is you write AS2 ka provision. Whatever is the relevant accounting standard, you write that accounting standard ka provision. What does that accounting standard say? That's the first point. Second one, you will tell what has happened in the present case study. What has the company done or they want to do. Third parameter, you will say conclusion. Whether they have done is right as per accounting standard or they have done incorrect treatment. That's all. That's how you will answer every standard question. Okay, now? Alright, you can write it in para format or you can write it in point format. The choice is yours. Maybe I'll stick to the point. Masala not necessary. Okay, some 3 to 4 points should be good enough. Wherever masala is required, I'll only tell. First point. What do you will write, sir? Definition of accounting definition and all not required. 2 marks they'll ask you all this. Okay, so we'll directly start with AS2, which talks about what? Valuation of inventories. Sir, standard ka name and standard ka number at your level you are expected to remember. Alright. So this you are expected to remember. If you don't know the name, don't write incorrect name or incorrect number. As per AS 22, if you know the right name and number, please write. Otherwise, do not write. If you write incorrect numbers, they will deduct marks. Alright? Or as per, if you don't remember the name or if it is not flashing, simply write as per accounting standard. Then write the provision. It is okay. Name and number you ignore. Don't write incorrect numbers. That's all. Okay? So as per AS2 valuation of inventory, or you can write as per AS2 valuation of inventory, comma, or you can, or let it be once again. AS2 valuation of inventory is not applicable. Is not applicable for whom? Is not applicable for producers inventory. Producers inventory of livestock, agricultural produce, comma, forest products, mineral ores. That's the first point. Okay. In the present case, what is the name of the company? Grow More Private Limited is a what? Is a producer or a wholesaler? Is a wholesaler and not producer. They have valued the inventory how? They have valued inventory at net realizable value. I'll call it as NRV. We'll go into that NRV also in a bit. They valued the inventory at net realizable value. That is what has happened in the case. Then finally you conclude. Conclusion. Since the company is not a producer, comma, AS2 applies to the company, correct? AS2 applies to the company, and accounting treatment given by the company is correct or incorrect? Incorrect. Accounting treatment given by company is not correct or is not accurate. Like that you can conclude. So this is how you'll be answering. So only thing you need to know is AS ka provision. Rest everything is your vocabulary, your words. No need to mug up these AS questions. Only provisions try to remember. Rest everything you can write it in your own words. Finished now? Those of you are done, can chill or revise what's been done in your mind. 4 points. No, I mean, if you want, you can just write AS2 is not applicable for producers inventory of agricultural produce also you can write. That is fine. If you can remember all 4 of them, remember. Otherwise, just write not applicable for agri produce. It should be okay. Done, is it? Okay. Yes, sir. All right. So let's move on to the next one. Sir, as per accounting standard 2, no? As per AS2, inventory should be valued, or maybe I'll just write it off here. As per accounting standard 2, you will value the inventory at cost or net realizable value, whichever is lower. You have anyway learnt, I think, this in your foundation or your BCom. Okay. Inventory should be valued at cost or net realizable value, whichever is lower. Okay, that's the basis for inventory valuation. That means to value the inventory, you need to find 2 components. What are those 2 components? Cost and NRV. NRV stands for net realizable value. Find out these 2 components. Whichever is lower, that will be the value at which inventory will be valued. Now we're going to spend some time how to find out each of them. Okay. All right. Maybe I'll just you got this point, no? There's one more question. Let's take up that and then we'll move on to that example and some provision. This example is still on hold, no? I'll give you the answer for that. Let it be. It's fine. Check this. Varada Limited, or maybe I'll just tell you this. Write on this maybe. It's there in your chart book. Cost I will give you. NRV is nothing but, maybe let me write the full thing. Net realizable value, or in short form, a class purpose, we'll call it as NRV. NRV is nothing but estimated selling price minus estimated selling cost minus further completion cost, if any. This is how you get NRV, net realizable value. Estimated selling price minus estimated selling cost or selling expense. Instead of selling cost, you can write selling expense also. Minus further completion cost, if any. Somebody is asking, sir, is NRV market price? Theoretically, you could say NRV closely relates with market price, but there are some differences also. I'll just tell you. Maybe I'll go through with this first and then we'll take up the next question. Writing. Okay. Sir, let's say I'm a shirt dealer. I buy and I sell shirt. Let's say I sell the shirt at 1,000 rupees. Each shirt I sell it for 1,000 rupees. So what is this 1,000 rupees? It is my estimated selling price. Okay. Fair enough, people. All right. But to sell this shirt, I appoint some selling agents. And the selling agents charge some commission. Let's say they charge a commission of 100 rupees per shirt. So that means what is that 100 rupees? It is my selling expense. Correct? So how do you get NRV? Estimated selling price, which in my example is how much? 1,000. Minus estimated selling cost. How much is it, sir? Further completion cost, we'll see it in a different example. Leave that. That means what is your net realizable value? 900. To think logically, what does NRV stand for? Net realizable value. Net realizable value means how much money are you recovering in net. So when you sell the shirt, how much money are you able to recover? 1,000. But entire 1,000 will come into your pocket, or 100 rupees commission you have to pay. 100 rupees commission you have to pay. To whom? Selling agents. That means net mein how much money is coming into your pocket now? Only 900. That 900 we call it as what? Net realizable value. Okay, everyone got it? Don't worry about further completion cost for the time being. It will come in one of the problem. We'll take that up. Everyone got this? Sir, isn't it same as market price then? Not necessarily. See, sir, just like me, there could be other shirt dealers in the market. Just like I'm a shirt seller. Will I be only one shirt seller in the market, whole market, or there'll be other guys also? There'll be other people also. Let's say they sell the shirt at 1,200 rupees. Possible. Each of them can sell it at their own price. Okay. On an average, other dealers sell the shirt at what price in the market? 1,200. That means what is this 1,200? Market price. Correct? But am I selling it at 1,200 or am I selling it at a lesser price? Lesser price. Net realizable value means how much money you are realizing. Market price means generally what is the price of that product in the market. Generally, these two are same, but there could be some differences also. Getting it? Net realizable value is always from the individual company perspective. Market price is the general market trend perspective. That is the difference. Are we okay? If they don't give further information, market price only will assume it to be net NRV. Like that. Okay, if they further give the information, their differences could be found out. Got the answer to that particular question online? Somebody asked that. Okay now? Alright. Now, let's see how well you have got it. Let's take up question number 2. Varada Limited, they purchased goods at cost of how much? 40 lakh rupees. So they purchased some product by paying how much rupees? 40 lakh rupees. Till the end of the financial year, 75% of the stocks were sold. 75% of stock is sold means how much is remaining? 25% is remaining. What is remaining only you call it as closing stock. That only we are trying to value. Yes, no people? Alright. The company wants to show closing stock at 10 lakh. Why 10 lakh? 40 lakh is the cost of the total goods. How much goods is already sold off? How much goods stock is already sold off? 75%. So how much is remaining? 25%. So 40 lakh or 25% is how much? 10. Okay. So basically they're saying the cost of the closing stock is a 10 lakh rupees. Correct? Huh? That's how they've got that 10 lakh. Any confusion? No. The expected sale value. In fact, company wants to show the closing stock at what value, sir? 10 lakh. Expected sale value is how much? 11 lakh. Commission is 10% on sale is payable to the agent. Agent here is the selling agent. What is the correct value of closing stock? Can you tell me?
9,90,000.
Sir, we just now learned. What did we learn here only? Maybe I'll write. Sir, inventory should be valued at what price? It should be valued at cost, or how should the inventory be valued at? Inventory should be valued at cost or net realizable value, whichever is lower. Company wants to value it at cost, but we have to find out cost and NRV both. Then only take a decision. That means how will you write? First parameter, what will you write? As per AS2, inventory should be valued at what price, sir? Or as per AS2, valuation of inventory, comma, inventory should be valued at? Inventory should be valued at lower of cost and NRV, can I write? Lower of cost and net realizable value. It's the first point. Okay, second point. What is the cost of inventory here? Cost of inventory. Total cost of the goods purchased is 40 lakh. And how much is remaining? 25%, which is nothing but what? 10 lakh. This is given to you in the problem. Okay. Alright, this is the cost. What is net realizable value? How do you get net realizable value? Tell me once again.
Selling price minus estimated selling cost minus further
Perfect.
cost.
Estimated selling cost or sale value, we'll write. Estimated selling price or estimated sale value minus estimated selling cost minus further completion cost, if any. Here further completion is cost is not there. If you want, you can cut it off also. That is fine. So NRV, how do you get? Do you know estimated sale value of this product? You bought it at 10 lakh, but they are saying you'll sell it at what price? The sale value estimated to be is 11 lakh. But to make the sale, should you have to incur any selling expense? Yes. What selling expense you have to incur? You have to pay a commission of 10% on the sale value. They are only telling. What is the estimated sale value, sir? 11 lakh. Of this, how much commission you need to pay? 10%. Correct? No. Further completion cost is not there. You can cut it off. So that means how much is your net realizable value? 11 lakh minus 1.1 lakh, which is 9.9. Okay, everyone. In terms of our calculation, everything is looking good. Now, company wants to value the inventory at 10 lakh. Can they do it as per AS2 or not? They can't. Why? As per AS2, inventory should be valued at cost or NRV, whichever is lower. Here cost is how much? 10 lakh. NRV is how much? 9.9 lakh. Which is lower? 9.9. Therefore, what is the conclusion? What is the conclusion? Value the inventory at NRV of 9.9 lakh. Company should value inventory. By inventory, we are referring to here as what, sir? Closing stock. Correct, no? Company should value the inventory at 9.9 lakh rupees. Or you can write there, it should value the inventory at lower of cost and NRV, or we can write like this, at lower of cost and NRV, and that which is lower, 9.9. So that is low. So value it at that particular value. That's all. Sorry? There's no profit element here. It's a loss-making company. You purchased it at 10 lakh, you're selling it at 9.9 lakh. So that means it is making profit or it's making loss. This is as per conservatism concept. What does our conservatism concept say? Expect a future loss and account it right now. But if there's any future gains, can you record it or record it later on? Later. That is the basis of inventory valuation AS2 has applied. That's the reason they say as per AS2, inventory should be valued at cost or NRV, whichever is lower. So profit is not included because obviously it's a case of loss. Sorry, sir? No, sir. Estimated NRV means what? See, these are rules. Net realizable value means what? How much money you will realize. You will realize only when you do what? Sell. So obviously for NRV, you have to consider what? Sale value. So that's how it is built. So you can't consider the cost element there. Cost matrix is already built in here. Again, if you consider, then what's the point? Okay, like that. Okay with this, everybody? So 2 questions are over. Understanding? So what have we learned so far? Give me a quick recap. AS2 talks about valuation of inventory. Inventory of three types. What are those? Goods, raw material, work in progress, finished goods. But inventory as per AS2 means what? Goods which are held for the purpose of sale in the ordinary course of business or in the process of production of such sale. Third one, or to be consumed in the manufacturing process. AS2 is not applicable for few things. One is work in progress relating to construction contracts. For service providers, it is not applicable. Shares, debentures held as stock in trade, not applicable. Most importantly, for producers, inventory of livestock, agricultural produce, forest produce, mineral ores, etc. etc. Livestock means if you are dealing with sheep, bed bakriya, if you're dealing with cow, calves, sheep, all this if you're dealing with, no, that we call it as livestock. Why it is excluded? Because there is a separate standard known as Ind AS 41 on agriculture. Specifically, it is covered there, which gives the treatment. Hence, they've excluded here. That is the intention. Okay. And then we also learned that inventory is broadly valued at what basis? Cost or NRV, whichever is lower. And NRV simply means net realizable value. So from the estimated selling price, if you reduce the selling cost, and if there's any further completion cost, if you reduce, the net number that you get only we call it as NRV. Okay, sir. Okay. Now you got to know about NRV, but what is the other basis for inventory valuation? Cost. We will learn about this cost. Then the example that I gave, table, that will be sorted for you once you know this. Can I take that up? Everybody? All right. Now, when I gave this example, I gave you various costs, correct? Standard simply answers all this. See, like this, you could have only 10 examples or you could have thousands of examples. You could have thousands. Can standard answer by keeping examples into consideration? They want to phrase a law, right? So they are using some words through which you can answer everything. What they say is, listen to this carefully. Everyone there, no? All right. Cost. What AS2 says is any cost incurred to bring the inventory. Any cost incurred to bring the inventory to the present location and to the present condition can be added to the cost of inventory. What did they say, sir? Any cost incurred to bring the inventory to the present location and to the present condition can be added to the cost of inventory. Let me decode that one by one. They're using two terms, present location and present condition. In my example, I'm a dealer and I'm a dealer in table. Na? Where am I situated, sir? I'm situated in Bangalore. So any cost that you incur on inventory which are necessary for you to bring the goods to your which factory? Bangalore ka factory. They can be added to inventory valuation. If that cost is necessary for the goods to come into your Bangalore factory, then meaning why Bangalore factory? Because that is my present location. So cost incurred to bring the goods to the present location, can you add? Yes. That's all they said, or one more they brought in. Present location and present condition. Two words they use. Present location and it's given there. Don't worry, I'll just show you that. Present location and present condition. Condition here means sellable condition. Any cost incurred to make the goods or to bring the goods into sellable condition. Even those goods or those costs also can be added to what? To the cost of inventory. Do you understand here? Two keywords. What are those? Two keywords. What are those? Present location and present condition. Location means our factory, warehouse, factory, or whatever you can call it. All right, that is one. Condition here refers to sellable condition. Till the inventory reaches sellable condition, if you are adding any cost or if you are incurring any cost on that inventory, you can add it up. That's all. Okay, everyone now? Did you understand that? Yes? Alright. If you have understood, you will give me the answer, the correct answer for all of this now. Let's see. Let's decode it one by one. Purchase cost. Sir, can you add purchase cost to the cost of inventory? If purchase cost is excluded, means what else remains? So can you add purchase cost? Yes. This you can add. People okay? Transportation cost. Sir, why is transportation cost incurred? To bring the inventory into my Bangalore factory, correct? Is this cost necessary to bring the goods to my Bangalore factory? Yes, that means this is necessary to bring the goods to the present location. So that means, can you add it up? Yes. Okay, no, sir? Or loading and unloading. That means transport guy left goods where? Did he bring it inside my factory or outside my factory gate? Outside my factory gate. I incurred this loading and unloading charges to bring the goods inside my factory. So is this necessary to bring the goods to the present location? Yes. Only after incurring loading and unloading cost, my goods will come inside my factory. So is it necessary to bring it to the present location? Yes. So can I add it? Guys, understanding, right? Everybody unanimous? Offline, online? No confusion? So this is necessary to bring the goods to the present location. Okay, great. Now, where has the goods come now? Where is the goods now? After assembly, the goods has come inside my factory. That means it is in the present location. So has the cutoff stage reached, or one more is there? One more, which is what? Present location and condition. Condition here refers to sellable condition. All right. Assembly charges have incurred. Why? Because did table come in as a full-fledged table, or it came part by part? It came part by part. One top part separately, 4 legs separately. I had to fit in. I had to call some laborers and do this assembly. So you tell me, can I add assembly charges to my cost of inventory? Yes. Why? Sir, I am a table dealer. If I'm a table dealer, means I will sell chair top part separately to my customer and 4 legs separately and tell the customer, hey, you do fitting down. You're only waste guy. Anyway, I have a lot of time. I will sell you in parts. Hey, customer, you assemble. Will we say like that, or will we give full table? We will give full-fledged table. So is this assembly charges necessary to bring the inventory to sellable condition? Yes. Correct, everyone? So can you add the assembly charges? Yes. Lamination charges. Lamination charges. Lamination charges is on the top of the table. I am affixing one sheet, and that sheet has my brand name. Without putting this brand name, will I sell it, or only after the sticker I will sell? How am I selling? That is important. Don't worry about, don't think logically, sir, this lamination is not important. No. Are you selling, or who is selling? Somebody else. For the seller, is this important or not? Don't go sentiments over here. Sir, we can sell without it. No, sir. Why is it required, sir? It is not your opinion. Who's doing accounting treatment? Company. For company, is this lamination important? Yes. When will they sell? When will they sell this table? Only after lamination. They will sell before lamination or after lamination? After lamination. Agreed? That means, is this lamination charges necessary for inventory to reach sellable condition? Yes, because only after it is laminated, then only they will sell. Correct? No? So that means, is this necessary to bring the goods into sellable condition? Yes. So can you add this also? Very much yes. Any confusion or got it? Confusion or got it? Got it. All right. Okay. Now, after lamination, what has happened? Once you laminate the product, the inventory has reached what condition? It is in present location also, and it is in sellable condition also. Has the cutoff stage reached? Has the cutoff stage reached, sir? Yes. Meaning, after this, if you are incurring any other cost, such cost will not be added to the cost of inventory. Such cost will directly be transferred to P&L. Did you understand this? Once the cutoff stage is reached, any cost you are incurring, will it be added to cost of inventory? No, it will be straight away going off to P&L. Now, receptionist salary. You tell me, receptionist salary, is it anyway related to table? Or this is irrelevant? This is irrelevant. Yes, no. Whether reception is there or she is not there, it doesn't matter, right? The table dealing will still keep on going. Is it related to that inventory or totally unrelated cost? Unrelated cost. That can you add? No. So this cannot be added to the cost of inventory because it is totally unrelated. Yes, no, sir. Okay, no?
Yes, sir.
All right. Salesman's commission. Is this necessary? Yes. But for what purpose? To sell. You will sell when? After it has reached sellable condition only you will sell, no? Or before that only you will sell? After it reached. Has it reached cutoff condition? Yes. That means salesman's commission, can you add it to the cost of inventory? No. This cost will directly, these two costs will directly go off where? To P&L. That's all. Now did you understand? So that 2 words is the key to answer many examples. Present location and present condition. Asked. Any confusion? Anybody? No confusion, huh? You want me to give you a minute processing time or proceed? Proceed. All right. Sir, what are we discussing currently about? Cost. And just make your small flow chart. This is there in your chart book also. I'm just doing it for the sake of explanation. That's all. Okay. We'll take up all that one by one. Hang on. I've not finished the whole thing. Sir, as per AS2, no, cost is broadly classified into three categories. One is purchase cost. Another one is conversion cost. Purchase cost, conversion cost, and other cost incurred to bring the inventory to present location and condition. Other cost incurred to bring the inventory to present location and condition. This portion we have already discussed. Everyone is comfortable with that, no? Present location and condition with example we have seen. So that's all right with you? Oh, yes, this is fine. I'll not go into that. Now we'll target this. So obviously, will purchase cost form part of cost? Yes, that is in fact the major portion of the cost itself. Correct? No? So there's no confusion there, right? Purchase cost is obviously form part of your cost of inventory. Sir, if you have any trade discounts, what do you have to do? Reduce. You have already learned it. Trade discount means if you buy the goods in bulk, you will ask for some discount. Like if you're buying one shirt and the shirt seller says 1,000 rupees. To buy one shirt, how much is the vendor asking? 1,000 rupees. You told him I'll buy 100 shirts. For one, it is 1,000. You want to buy how many shirts now? 100. What is the first thing you will ask? Discount, please. For one shirt, 1,000. For 100 shirts, give me some discount. Yes or no? Because you're buying it in bulk. So discount given at the time of purchase and sale, we call it as what? Trade discount. So if there is any trade discount given, we already know this. For trade discount, we do not pass any journal entry. It is directly reduced from the purchase price or selling price depending on how the discount has arisen. Yes, no? So if there is any trade discount, etc., reduce. Okay, everyone. If it is given in the problem, consider it. Otherwise, ignore. Okay, no? If there is any non-refundable taxes, then you can add. Anyway, tax is covered.
Yes, sir.
GST, indirect tax is covered. No.
ITC.
Yeah. If you leave that, I'll not go into ITC for the time being. Sir, simple. I'll just tell you on this one. I'm sure you know this already. Have you gone shopping? Obviously, we go. Correct now. All right. Let's say you bought one shirt. Let's say the cost of that shirt is 1,000 rupees. Obviously, इसमें GST लगेगा. Okay, so you also have to pay GST also because you wanted bill. You are not that kind of person. You said, I want a bill. He told you, no problem. I will give you with the GST invoice. I don't know for the shirt, what is the percentage it comes under. For simplicity, I will take it at 18% or 10%. A simple calculation, I'll take 10. I know 10 is not a rate. Leave that. It's fine. Just for the sake of example. So how much is this now? 100 rupees. That means totally how much did you pay? You paid 1,100 rupees to the vendor and you got your shirt. Okay, na sir? Correct? This shirt, you're not shirt dealer. You bought it for your own consumption. You bought it and you're wearing it and aram say you're very happy. Okay, that's all. Matter end. How much did you pay, sir? 1,100. In this 1,100, you also paid some tax. How much? 100. You paid. Did you get this 100 rupees back or Tirupati toss? Tirupati toss only. Correct? Now you paid. Are you ever going to get that back? No. That means you have paid. Are you getting any refund of it or gone? Gone. So that we call it as non-refundable taxes. Meaning if you're not able to claim the input tax credit, it is what we refer to as what? Non-refundable taxes. Are we okay with this? So if you have such non-refundable taxes, you can add it. Got it? All right. Now if I have to modify the example, sir, you're a shirt dealer. If you're a shirt dealer, what you will do? You will buy shirts and you will sell shirt. When you buy the shirt, let's say you bought it at 800. Okay. That means you will pay some GST on it. Let's say you paid 80 rupees GST and totally how much did you pay? 880. This is at the time of purchase. And after purchasing, what you will do? You will sell it. Let's say you sold it at 800 only for simplicity purpose. Just for simplicity purpose. You sold it at 800 only. So when you sell it to the customer, you will also collect what from the customer? GST you will collect. That means how much will you collect from the customer? 880. How much did you pay for buying the shirt? 880. How much did you collect when you sold it? 880. So this tax of 80 rupees when you paid, when you purchased it, are you not claiming it back from the customer? So meaning on one hand you paid, on another hand you are collecting it back. So that means what? It is getting refunded. So if you have any refundable taxes, you cannot add. Only if you have non-refundable taxes, you can claim. Simple to us, if I have to talk from tax terminology, if ITC is available, you cannot add. If you cannot claim the input tax credit, then you can add. Like that. Okay. Super. Okay. This is the first leg of the cost. Any confusion? No. Next, we will go on to the conversion cost. So conversion cost, broadly you can put it up into 4 categories. First of all, what does conversion cost mean? Is it necessary I have to be a dealer in all the cases, or can I also be a manufacturer? If I'm a manufacturer, see, conversion cost will only come in case of whom? The manufacturer. If you're manufacturing any goods, meaning you're converting raw material into finished goods. You buy raw material and from that you will produce finished goods. To convert raw material into finished goods, you have to incur some extra cost. That we are talking about now. So conversion cost can be broadly put up into direct material cost. Anyway, costing is also done, I think. And then will be direct labor cost, direct material cost, direct labor cost. You need not copy all this. It is there in your books also. It is there in your chart also in the better format. For the sake of example or explanation, I'm writing it down. So direct material, direct labor.
Direct expense.
Yeah, I mean, I just put it up here only. We're not talking about prime cost element here. I'm just putting it up there only. Variable production overheads. Variable production overheads. And fixed production overheads. Variable production overheads and fixed production overheads. So conversion costs are of 4 types. Direct material, direct labor, variable production overheads, and fixed production overheads. Yes, I'm assuming there are no other direct expenses. That's how they form the standard. If there is any direct expense, you can add it up. That's not a problem. Okay. Now, let's take an example and try to decode this. Sir, I'm a car manufacturer. Let's take the example of maybe Hyundai. Hyundai manufacturers only one types of car, or they have a lot of varieties? Lot of varieties are there. i10, i20, old one, Santro, Venue, Creta, Gita. So you have so many. And in that you have diesel variant, petrol variant, electric vehicles. Correct? So many variants are there. Okay. So now they want, let's take example of one maybe. Let's say their flagship product actually till last year was Hyundai Creta. That was their probably most selling product if my memory serves right. Okay. Creta, let's say they want to manufacture Creta car. Now you tell me, to manufacture that car, does Hyundai require any raw material?
Yes, sir.
Yes, the main product that goes in is the steel. Correct? No, steel is what that gets ultimately get converted into the car. And there could be some plastic bodies also, but the major part of it is the steel. Okay, now, all right. The steel, can Hyundai, I'm asking you a question, can Hyundai add steel cost to the cost of inventory? They want to manufacture one full-fledged car known as Creta. Creta is a raw material work in progress, or is it a finished product? It's a finished product. To produce this finished product, they need to buy a raw material known as steel. Can you add steel ka purchase cost to the cost of inventory is the question. Yes, that is what we mean by direct material cost. So in case of car, the example of direct material cost could be your steel, any plastics that you're producing, or tires that you're producing. Tires, normally cars and all, car manufacturers don't manufacture cars, they buy, manufacture tires, they buy the tires from other manufacturers. Okay, so all these are what, sir? Direct material cost. They are necessary for what? To convert raw material into finished goods. So basically, even conversion cost is a cost for inventory valuation purpose. One such conversion cost which we discussed is what, sir? Direct material cost. Any confusion? Can you add a direct material cost to cost of inventory? Yes. Sir, will it automatically, after you buy steel and tire and all, it will automatically become car, or some laborers have to come and work? Some laborers have to come in and put in some efforts, and then only it will become. Yes, no? Those laborers will do it at free of cost, or you have to pay them? You have to pay them. So that means, is this necessary to bring the inventory to the present location and to present condition? Unless laborers come and work, will it become a car or it will not? For it to become a full-fledged car, is this labor cost necessary? Yes. That means, can you add this to the inventory valuation? Yes. Okay, people, how much ever you're paying to the laborers, you can add it to the cost of inventory. They will give you all that data in the problems which we will look into it. Everyone getting it now? All right. Next is variable production overheads. You know what does overheads mean, right? Overheads are the indirect cost. To produce the cost, or to produce the goods, you have some direct cost as well as indirect cost. So if I have to take this car example, sir, once this car is ready, when it's assembled, immediately the company will sell it to the customer, or they'll do some testing. They'll do some testing, correct? No, correct. So that means how is the airbags working? How is the mileage and all that stuff? Well, let's take the example of mileage. Every car they will test and then only sell. That means first car should run. For the cars to run, should you not buy petrol and diesel? Correct? No, only half. Let's say it's a petrol variant. Let's take an example of petrol. It's a petrol car. To know whether the car is functioning or not, first you have to do a test drive. For you to do the test drive, you have to buy what, sir? Petrol. Now, if you ask the Hyundai people, how many tires are required to manufacture one car? Will they be able to tell you?
4 tires.
They will say, car in India has only 4 tires and plus one backup of Stephanie. So totally in a car there will be 5 tires. Any production manager or anybody will tell what? To manufacture one car we need how many tires? 5 tires. Easy. You went to him and asked, for testing, no, how much petrol will you buy? Will he give you exact number? Will it work like this? To test this car we will buy 10 millimeters of petrol. Or 1 liter of petrol, like that in Hyundai will buy, or they'll buy in lump sum. They'll buy some 100 liters, put that into various cars, whether it could be Creta, Santro, i10, i20, it doesn't matter. They'll put this petrol into every car and do the testing, correct? No? Can you correlate this with the final product directly? Like when I asked you tire, you clearly told what? For one car there is 5 tires. Are you able to link it directly with the finished product? That we call it as a direct cost. Direct cost means those costs which are direct expense, means those expenses you can directly relate it to what? Finished products. Okay, like tire is a perfect example of a direct cost. But this petrol, diesel and all, is it necessary? Yes. But can you pinpoint how much exactly you need for this one particular unit of car? How much petrol you'll use? Can you tell it? Or little difficult? Little difficult. Is it necessary? Yes. But can you exactly pinpoint? No. Such cost we call it as overheads. Meaning indirect cost. They are necessary, but you cannot directly relate it with the final product. Okay, everyone? All right. So this is an example of various variable production cost. Is this also necessary, sir, to bring the inventory to sellable condition? Yes, because only after testing only you will sell, no? So can you add this to your inventory valuation? Yes, this also can be added to inventory valuation. All these 3 data now will be added on an actual basis. Meaning they will give you in the problem how much these costs are incurred. Take that data and directly add it to the cost of inventory. No problem there. Yes, Asaru? Yes. Any doubt, Asaru? Can I go to the last leg? Yes. Which is what, sir? Fixed production overheads. Sir, overheads means it's a direct cost or indirect cost? Indirect cost. Let's take the example of maybe factory rent. To manufacture car obviously you can't manufacture on the road. I know that we pay road tax, so we pay 101 tax, but that does not mean road belongs to us and we can do everything on the road. Can they do that? No. So that means this manufacturing process has to happen in a factory. If you don't own the factory, you have to take the factory on rent. Yes. All right. Now you tell me, is a factory rent necessary to produce the car? Yes, because cars are produced in factory only, no? Yes. But Hyundai will have one factory for Creta, separate factory for I-20, separate factory for I-10, like this. For one car, they will open one factory, yeah? Or everything will happen inside generally one factory only. Yeah? Everything will happen in one factory. Correct, no, sir? Correct. So is this cost necessary to bring the inventory to sellable condition? Yes. Without this, can you manufacture? No. But can you clearly pinpoint how much area of factory is used for this purpose only? Like that, can you clearly correlate? Little difficult. Because in a factory, you are using this factory to produce various goods. No? That is the reason it is what, sir? It is an overhead. But it's a fixed overhead, meaning the rent is fixed. Are we okay? So is this necessary to bring the inventory to the present location and condition? Yes. Okay. Or another example if you want. Factory manager's supervisor salary, production supervisor. What does that guy do? He aram se sips tea and goes around checking whether the people are working or not. His job is only to check whether things are going smoothly or not. Yes. Is he necessary? Yes. Because he is the, in a way, quality guy, quality check guy or checkpoint guy. Yes, no. He will check only one product or he will supervise many products. Many products. That means, can you tell me, if he is supervising 10 products, can you clearly tell me in one day how much time he's spending on one product? Like he's spending 18 minutes on product number 1, 45 minutes on product number 2. Like this, will you have data or it's a general data? General data. That means, is it a direct cost or is it an overhead? Overheads. Is it necessary? Yes. Okay, that we call it as fixed production overheads. Any problem, anybody? No, sir. Sir, for fixed production overheads alone, it should be absorbed. We'll also do the question on this. Absorbed on the basis of normal capacity. Or 1 minute, hang on. It is absorbed on normal capacity or actual capacity. Normal capacity or actual capacity, whichever is higher. What is this? I'll give you an example. Hang on. Fixed overhead should be absorbed. You can add fixed overheads to the cost of inventory. You can add, but how to calculate that, how it got absorbed is based on two things. What are the two things I've written? Normal capacity or actual capacity, whichever is higher. This also, it's fine. I'll give you there. It's there in your books as well. Now, what is this all about? Let's look into it and then we'll, I think more or less many concepts are done. We can dive into the problems directly. Okay. I'll take the example of calculator deal only. We're talking about fixed production overheads over here. Sir, why factory rent is presented in trading account? Factory rent comes in trading account only. No? But you're saying it should come in manufacturing account. It's only for manufacturer. It's fine. Okay, we don't prepare any trading account now, or now we prepare now what? Manufacturing account, because we prepare as per P&L as per schedule 3. That and all is your foundation, man. Leave all that. Trading, manufacturing account, leave, come out of it. Nobody uses anything anymore because companies prepare it in schedule 3 format. So that is not even there. And that bachpan is gone. Correct. Okay. Nice, you remember, but not required. Dump it off. All right. These are things you need to remember. So let's focus more on this. Okay. Sir, I'm a calculator person. I'm a calculator manufacturer. Normally, or maybe 1 minute, hang on. I'll just give you an example of normal capacity and actual capacity and then move on. We know that fixed overheads should be absorbed on what basis? Normal capacity or actual capacity, whichever is higher. Now, let's take this example only. Let's say there's a classroom. Okay. A classroom, let's say our classroom can fit about 70 students, let's assume. Our classroom has a capacity to fit in 70 students. All right. Now, are you 70 students here or majority of them are in online? Majority of them are on online. Let's say there are only currently 50 students, assumption. Sir, I can fit in how many students in my classroom? 70. I can normally fit in how many students? 70. But actually, how many students are physically present in the classroom? I'm not talking about online. Physically, how much is present in my example? 50. This 70 students, we call it as normal capacity. And this 50, we call it as what? Actual capacity. Did you understand the meaning of it? Normal and actual. Okay, everyone now? Coming back to this particular example. I'm a guy, a calculator dealer. I have a capacity to produce 1 lakh calculators. My factory is capable of producing how many calculators? 1 lakh calculators. Okay, good factory, big factory, 1 lakh calculator capacity it has. But unfortunately, no. COVID came. I put factory and then what, sir? COVID hit. You know, that lockdown and all. I think now it looks like full distant dream, but it happened, right? That time it was like, oh, what the hell is this? What is happening, right? Whether you're crorepati or you're pauper, it doesn't matter. Everybody were locked in. Okay, and in fact, everything was almost, it doesn't really matter there, right? Like that. So, let's say COVID came. Now, do you think, can I produce 1 lakh calculator? First of all, factory only was shut. Correct, no? And lockdown and all, if you remember, got opened somewhere in what, February or March, somewhere. Yeah, if you remember that lockdown was lifted, I think. Yeah. All right. Let's say due to this COVID, in that year, no, I produced only, let's say, 1,000 calculators. Normally, my factory, I produce how many calcs, sir? 1 lakh. But due to this lockdown restrictions and laborer shortage and other shortage, I was able to produce only how many calculators? 1,000 calculators. Okay, sir. Okay. Sir, I'm producing this calculator in a factory. For that, I am paying a factory rent. Let's say my factory rent is a 10 lakh rupees per annum. I pay a rent of how much? 10 lakh rupees. I told the owner, reduce the rent. No, he told, get lost. Rent is 10 lakh. You have to pay me 10 lakh. Otherwise, take your whatever machinery and get lost. Vacate the premises. I told, what to do? Let's continue. Okay, now. All right. So now come back to that concept. What does the AS2 say, sir? Fixed overhead should be absorbed on normal capacity or actual capacity, whichever is higher. I'm telling you the logic of that particular rule. Actually, you know what to be done. Normal or actual, whichever is higher. For examination, only that much is required. I'm telling you why is that rule implemented over here with this particular example. Now, let's try the fixed overhead absorption first on actual basis. Or maybe first we'll do it on normal basis. Okay, check, sir. What is your total fixed cost? 10 lakh rupees. And how many units of calculator normally I produce? 1 lakh calculators. That means this 10 lakh rupees that I'm incurring as a rent, is it for one calculator or is it for 1 lakh calculator? This 10 lakh money that I'm incurring is for 1 lakh calculators. Okay, everyone. So per unit, how much? Can you tell me the unit cost? So per unit it will be what? 10 lakh divided by how many calculators I took in my example? 1. That means what? 10 per unit. Correct, no? So 10 rupees fixed overheads, I will add it to my each product. Comfortable, everyone? Cost has to be added to inventory, no? Each line. So fixed overheads as per normal capacity, I have to add how much as per this working? For each unit of calculator produced, 10 rupees will be added as factory rent. But the name you will give is fixed production overheads. Based on what capacity? Normal capacity. Let's try the other one. What is the other one? Actual capacity. Let's try to work it out using actual capacity. What is the factory rent still?
10 lakh.
10 lakh only. But here using what capacity now? Actual capacity. Actual capacity means the actual goods manufactured. How many calculators did you actually manufacture? 1,000. So do this 10 lakh divided by 1,000. You do how much you're getting?
1,000.
Huh?
1,000.
Or maybe 1 minute. Let's do it as 100. Maybe better. Just for the sake of example. Let's say 100 calculators I manufactured. So how much am I getting here?
10,000.
I'm getting how much, sir? 10,000. 10,000 per unit. Now you think logically. You are selling gold or you're selling calculator? Gold or calculator? Calculator. Can you add 10,000 as the cost for one calculator? That too not total cost, only what cost? Fixed cost. Other than fixed cost, you have production cost, you have purchase cost, you have other things. 10,000 will you be able to add, sir? If you add it also, will anybody buy? If you tell only, literally they throw a calculator at your face only. 10,000 rupees for one calculator, when anybody will give? No. Now you tell me which is logical. It should be absorbed based on normal capacity. Normal capacity, that is the reason this rule has been brought in, that fixed overhead should be absorbed based on normal capacity or actual capacity, whichever is higher. In this problem, which is higher? Normal capacity is 1 lakh, actual capacity is 100. Which is higher? Normal capacity. So you'll use that. Because if you use actual capacity, you will end up with weird numbers like this. Okay, what to do for the other ones, I'll tell you in one problem, how it works. That is the logic of that particular rule. Got it, everybody? Working. All right. So this is one. I think now you are saying, sir, problems, Madi sir, enough theory, sir. How much theory, sir? Break up. Already break up, huh? We didn't even get started now. Let's do a thing. Take a break. Huh? Okay, let's have a quick recap only on the cost. Inventory should be valued at cost or NRV, whichever is lower. Cost for this purpose is categorized into three things. What are those?
Cost of purchase,
Purchase cost, conversion cost, and other cost incurred to bring the inventory to the present location and present condition. Okay, now sir. Under purchase cost, if there is any non-refundable taxes, you can add. If there is any trade discount, etc., you reduce. And conversion cost are of four types: direct material, direct labor, variable, not variable overheads, variable production overheads. If you have any administrative overheads, it will not come, sir. All the costs should be related to inventory, mind you. So that means this is a variable production overhead, and the fourth one is fixed production overheads. Direct material, direct labor, variable production overheads. All this will be added on an actual basis. They'll give you the data directly added. But fixed production overheads alone, we will absorb based on normal capacity or actual capacity, whichever is higher. That's the thing we have seen. Okay. Thank you.